In the past 1 month, the Kenyan shilling has lost at least 100 basis points of its value to the US dollar, and doing some of the gains made over the last 3 months. Experts are now warning that the shilling could slide further and shed more value following the rejection of the controversial finance bill, which has made investors jittery over Kenya's abilities to meet its fiscal obligations. Jimmy Mbogoh now takes a look at the shilling's trend over the last month, which has been characterized by protests and uncertainty.
Over the last month, the Kenyan shilling has continued to shed its value against the US dollar to stand at 132.5 by the close of business today. The quickest depreciation since February, when the Kenyan currency gained against the greenback. In February, the shilling rapidly gained against the dollar from a depreciation that had seen the Kenyan currency trade at 160 against the dollar to as low as 125 shillings by the end of the first quarter. An equilibrium that brought certainty to the exchange rate. However, the rejection of the finance bill due to nationwide protest, which was followed by a Moody's rating downgrade. According to data from the central bank, as of 18th of June, the first day of the protest, the Kenyan shilling stood at 128.77 to the dollar. This would later drop barely a week later to 129.52 by the 27th of June, and further down to 130.46 on the 19th of July, exactly 1 month after the protest began. With the next drop coming only 5 days later on the 24th of July, when the shilling hit 131.05 before moving to 132.21 a day later.
The protests did contribute to disruption. Areas such as tourism and trade were affected. So we do expect this is already some of the reasons that are playing out to weaken the shilling.
The rejection of the finance bill led to a vote of no confidence in the Kenyan shilling. So a lot of persons who are betting on the recovery of the shilling against the dollar are now having different opinions, mainly as a result of a couple of factors. One of them being that the government may not be able to raise the same amount of projected tax revenue it was looking to raise this year.
Further, the shilling continues to face more shocks with a reduction in diaspora inflows into the country, an issue that experts say put the country at risk of tapping into its forex reserves to meet the demand for the greenback, with additional challenges coming from the maturing debt as well as undersubscription of government paper by investors.
We have seen investors undersubscribing to these government bonds is basically because they are not very confident that the government will be able to pay when these bonds mature. So what we are seeing is an inversion of the bonds curve, mainly people being willing to lend to the government for the next 90 days and less willing to lend to the government for the next 10 to 20 years.
We are seeing diaspora remittances coming down. If you look at the June numbers, are significantly below what we saw in May. So that's definitely a...
Jimmy Mbogoh, Citizen TV, Nairobi.